Why is Paytm falling on the bourses? The shares came under pressure following the news that HDFC Mutual Fund, one of the four mutual funds that were anchor investors in its IPO, significantly reduced its holding of Paytm across two schemes in the month ended December 2021. Shares of 197 Communications, which owns the Paytm brand, fell sharply by over 6% on Monday to hit its all-time low of rupees 1151. Before closing at its rupees 1157.9, the shares came under pressure following news that HDFC Mutual Fund, one of the four mutual funds that were anchor investors in its IPO, significantly reduced its holding of Paytm across two schemes in the month ended December 2021. Why the fall? Shares of Paytm fell 6% on Monday and they have lost 13% since December 31, 2021, while mutual funds held 0.81% in the company as of November 17, 2021. Disclosure of reduction in holding by HDFC Mutual Fund in the company weakened investor sentiment. According to the monthly portfolio disclosure of the scheme as of December 31, 2021, while HDFC, a mid-cap opportunities fund that had invested rupees 65 crore in the company at the time of its IPO, brought down its holding in the company to nil by December 31. HDFC Balanced Advantage Fund, which had invested rupees 39 crore in the company, also reduced its holding by over 90% from 1.84 lakh shares in November 2021 to 15,000 shares in November to December 2021. Market participants say that while the IPO was overpriced initially and that resulted into weak subscription for the issue, the sentiment around the stocks turned weak following its underperformance since listing at the stock exchanges. There have been concerns over the business growth potential of the company too. As a result, it has not been able to sustain its price at the stock market, said a fund manager who did not wish to be named. The fund manager further said that a large fund house generally exists a company only if the fund manager realizes that it made entry at the wrong price level and that there is more downside to it. When the fund manager believes that the stock may continue to trade low over the near to mid term, they book losses and exit, he said. When contacted, HDFC MF spokesperson declined to comment as fund houses do not comment on stock specific investment decisions. Who all invested in the IPO? While investors were allotted shares at rupees 2150, they have not been able to touch the issue price ever since it got listed on November 18, 2021. The highest that it has ever hit was 1961, and that was on the listing day. While mutual fund held 0.8% in the company as of November 17, 2021, FPIs held 10.37% stake in the company. As part of anchor investments, four mutual funds had invested rupees 1050 crore at the time of the initial public offering of the company, while Aditya Birla MF invested 515 crore across 9 schemes. Mirai Asset invested rupees 375 crore across 4 schemes. HDFC Mutual Fund invested an aggregate of rupees 150 crore across 4 schemes, and BNP Paribas invested rupees 10 crore during the IPO. Market regulator SEBI has changed the rules for anchor investors to prevent a crash after 30 days of listing. The existing lock-in of 30 days will continue for 50% of the portion allocated to anchor investors, and for the remaining portion, lock-in of 90 days from the date of allotment will be applicable for all issues opening on April 1, 2022. Why have investment banks cut Paytm rating? Leading investment banking firm Macquarie has cut the price target for the Paytm stock by 25% to rupees 900 from around 1200, retaining its underperform rating on the stock. This means there could be further downside in the stock. Post the various business updates and results, we believe our revenue projections, particularly on the distribution side, are at risk. Macquarie said in a report. It has cut its estimate for Paytm's revenue by an average 10% per year till 2025-26 due to lower distribution and cloud revenue. This has only partially been offset by higher sales from Paytm operations. Senior executives have been resigning from Paytm, which is a cause of concern and could impact business in our view if the current rate of attrition continues, it said. What's Paytm saying? The number of loans disbursed through Paytm platform increased by 401% year on year to 4.4 million loans in the third quarter of financial year 2022. This is a continuation of the significant growth seen in the past quarter. In Q3 FY 2022, the value of loans disbursed through our platform during the quarter was Rs 2180 crore, an increase of 365%. We have seen stellar growth in each of the lending products: Paytm postpaid, personal loans and merchant loans, Paytm said in a statement. GMV, gross merchandise value processed through our platform during the quarter, aggregated to approximately 2,50,100 crore, growth of 123% YOY compared to quarter 3 of financial year 2021, it said. Paytm's monthly transaction users showed consistent growth in financial year 2021 and in the first two quarters of financial year 2022, it said. The trajectory has continued in the third quarter of financial year 2022 with 64.4 million average MTUs, growth of 37% YOY over the 47.1 million average MTUs in quarter 3 financial year 2021. Thank you.